Thanks for tuning in to another episode of From Funding to Fame, where we interview the founders and funders currently raising capital on FrontFundr, as well as experts in the private capital markets. I'm your host, Trieste Redding, the head of campaigns at FrontFundr, and I'm excited to introduce more Canadians to equity crowdfunding. This podcast episode features conversations about a business's current operations and future plans, and as a result may contain forward-looking information. There can be no assurance that forward-looking information will prove to be accurate, as actual results and future events could differ materially from those anticipated in such statements. Listeners should not place undue reliance on forward-looking information. Today we're here with the CEO and co-founder of Mode Mobile, Dan Navias. Mode Mobile enables millions of budget-conscious consumers to earn passive income via their daily habits through a reward-based super app. They are revolutionizing the smartphone industry with the world's first EarnPhone, the smartphone that pays for itself. Hi, Dan. Thanks so much for being here. Welcome to Front Funding to Fame. How are you doing today?
I'm good. Thank you so much for having me.
Yeah, we're very excited. I know you've got a very impressive background in your career so far, and very excited to dive in more on Mode Mobile today. So would love to hear a little bit more about yourself and what your career has looked like to date.
I've been doing entrepreneurship centric businesses since I was in high school. I started an e-commerce business. I had grown up between both US and LATAM my whole life. Ironically, was in the electronic space, specifically cell phones. I'd scaled that business to a couple $1 million a year, by the time I was in college. Had an unfortunate circumstance occur in college where one of my warehouses got robbed, and I almost lost everything that I'd been building for these various years. And that actually is what actually got me into software, because I had this whole thesis that, well, if I was in software, it wouldn't have been able to get robbed like that. And so that's actually what got me into the digital realm, although there are hackers and stuff, but nonetheless, there are some other opportunities there. And started building stuff within the app space. Met my co-founder right around this time, who this was about 11 or 12 years ago. I actually met him when he was in high school, and I was probably about 24 years old. And we were working and have been working together since then. And ultimately, had a little series of small exits, and ultimately created this app that initially was rewarding people for the music that they were listening to. And it was not working at all, to be honest with you. And we basically pivoted. And we had like this little morsel of users that were actually using the product. And we interviewed them. It's like, hey, why are you using this product? And we found out that it was a very unique subset of consumers that were using our service because they didn't want to pay for subscriptions, and they were more budget conscious and had, maybe more time than they necessarily had capital. And so we really thought about that idea, and we're like, okay, well, what if we could reward people for, the time they spend listening to music instead? And so then that got a lot of traction, but the music business is a pretty difficult business to make work. And so we expanded into other activities that people do on phones. So we were like, oh, let's do games. And then we were like, oh, that's starting to work. Let's do shopping. Let's do charging. Let's do unlocking. And before we knew it, we had created this idea around really creating like almost like an earning, ultimately we called it like an earn OS, like an earning operating system for the phone. And, and that's what really gave the idea of the business, fast forward, call it 6 years later after the 6 or 7 years later after that kind of idea of like, hey, like let's reward people for their time. We have over 45 million users, have facilitated over $250 million in earnings and savings back to consumers, and have done tens of millions of dollars in revenue, and have created 2 EarnPhones and continue to scale with our team around the world. So that's a little bit about our background.
Wow, it's a pretty incredible story from, being in the hardware business, having your warehouse robbed there. That's terrible, but sounds like it definitely led you on the path to explore new avenues, and that there were quite a few iterations to kind of get to the point where you are today as well, which is great. So maybe you can tell us a little bit about kind of what the early days of the startup look like. I know you mentioned kind of a couple iterations to get to this concept, and maybe, what some of the initial hurdles were that you faced as well. It's definitely a new concept, right? Earning with how you use your phone. So yeah, I would love to hear a bit more
Yeah.
about that.
Yeah, I think it is a very difficult business to get right. I think that's actually why people have not really been able to crack this business, and it's such a big opportunity. But I think people have been trying since the dawn of the internet, and first with desktops, then computers. Of how can you basically create an advertiser supported model to sustainably reward people for the things that they do each day. And ultimately, what it comes down to is that people haven't been able to make the unit economics work. And the reason of that is that you have to essentially create value on multiple sides of the equation. You have to create value for the consumer so that they use your product enough and they're earning enough to find it valuable. You have to create value for the advertiser that is likely subsidizing that cost and wants that consumer to do something. And then you have to create enough value for yourself to not go bankrupt. And so it's pretty tricky to balance those three components. But I think what ultimately the approach that we took was a mixture of a couple different things. First, we knew and know that people like to get paid for doing the things that they already do each day. But the way and the time and place that we are in society is that the cost to build like a smartphone today, like a 6-inch smartphone, is lower than actually it is to build a 5-inch smartphone or a 4-inch smartphone. If you think about the first iPhone, if you actually ever hold it, I did it recently actually because I have one, and it literally feels like a toy, that I would give to like a child. And so it's actually cheaper to build that 6-inch phone today than it ever has been, and that's really kind of following Moore's law of technology keeps getting better. And then also the internet speeds that currently exist with 5G, and basically the fact that now consumers are spending 40 hours a week, which is essentially an entire work week, on their phones. And so we basically have that, like those call it tailwinds in our direction of like the time and place in society, and that's usually kind of what differentiates a Facebook from a Friendster. Is the right place and the timing. And then the other component is that we took an approach that was like, we really dove into every single thing that you could possibly think of and touch in your life to create value for. And if you're able to basically make a few cents here and a few cents there and a few cents here and a few cents there, those things really begin to compound, especially when you get into financial services, when you get into other types of components of things that you're doing on this device. You can actually make a lot of value and create savings for people, not just earnings, but also savings. And I think that that's kind of what has allowed us to really scale along the years. Now, there's the ups and downs of like kind of the broader consumer market as advertising winds pick up, and we've had to continuously iterate our model. So we built a 7-figure subscription business last year out of thin air. Essentially, we didn't have a subscription business at all, but once we started seeing the downtrend in the broader economy into 2022, when a lot of these IPOs like really started going bust, and market cash started to get harder to take in, we were like, hey, let's rethink our business and our revenue strategies. And we created a ton of different new revenue models, including a subscription business, to create more recurring revenue around it. Another thing that we did is like, hey, we're not going to focus just on hardware devices, and the vast majority of our revenue is actually made on the software side. But we started then licensing our technology to other smartphone makers. And we had this broader idea, if you're familiar with like Roku, the television maker. And this is kind of like people ask me like, what business is your company most like? And the answer is really like, I've actually never really seen a business kind of like ours. As you were saying, it's a pretty unique concept. But the one that maybe has the best parallel is Roku, which essentially, if you're not familiar, is the television streaming service. And it's probably worth about $15 billion today, 10, $15 billion in terms of its market cap. And their big thing is actually, it was like the ugly stepchild of Netflix. A lot of people don't know that. And it was a business they wanted to divest out of. And then they kept working on this hardware device to make streaming on your television, great. But it was just never really worked out. But in 2015, after a bunch of series of pivots, they had this great idea, which was like, hey, we're going to go to these television makers, JVC, TCL, etc. And we're going to power the smart TV for those television makers. And they already have crazy distribution. And what these television makers then realize is like, hey, like we make like 5% gross margin, which is, if a television costs $100 today, you're going to make $5. So pretty bad business that you have to operate at max, like really volume. But instead of making that 5% gross margin, you're going to make all your money on the advertising and the data collection of people streaming over time. And that's happening without you consumers getting paid. Where you're seeing that effect happening is where television prices went from $2,000 a television to the same television today costs $200 or $100. And that's why, is because your data is getting harvested on these televisions, whether you like it or not. And that's also why these companies like Facebook, Google, et cetera, are trillion-dollar businesses, is because your data is getting harvested and they're monopolizing and monetizing that data. And so basically our thesis from a business perspective is, hey, like we can license this to other smartphone makers. So what you'll eventually see is not just a Moto EarnPhone. You may eventually see a Samsung EarnPhone, a Motorola EarnPhone, Nokia EarnPhone, whatever it is. We're really the creators of EarnPhone. And then we have our own distribution through our apps and through, our own devices. And we make a lot more money than the hardware makers make, because we make money on the software. And the benefit to the consumer is that your data just isn't getting harvested or attention is getting like swiped for our gain. We're sharing that revenue with you, and everything's opt-in. And so we think that's a way more equitable model. And at the end of the day, there's about 7 billion people that use smartphones around the world. And as mentioning, younger generations are using more than 40 hours a week. It's closer to 50 hours a week, and that's actually going up as the phone becomes the first device, not necessarily the computer. And so we think that that is a trillion-dollar opportunity. It's much like what Airbnb was able to do for houses and Uber was doing for cars. They were able to essentially create a new asset class, except not everyone owns a house or a car. But everyone, whether you are in sub-Saharan Africa or in New York City in Manhattan, you have a smartphone. And so we think it's like the most ubiquitous asset around the world that can be unlocked and created into essentially a new asset class. And that's really the thesis behind what we do at Mode.
That's great. I really appreciate the in-depth kind of overview there. I think Roku was a great example to illustrate what it is that you guys do. I know I'm quite familiar with both the hardware and software side of what they're doing. So I think that's a great way to illustrate it. I know you mentioned as well creating a solution that works for the users, the advertisers, as well as yourselves. So going back to kind of the earlier days for a second here, maybe you could walk us through kind of what it was like to go about finding those first customers and advertising partners as well. As you said, it's a very new concept, very unique. So I'd be interested to hear kind of how it was to get those early adopters on board with what you were doing.
Yeah, so I'll break it down into two ways. Like the consumer side was actually, once we solved the fact that, hey, like once we made the one little pivot of get paid to play music, then actually users, that was easy. That the people were just like, yes, I love that idea. Um, I'm already going to do that. So if you're going to do that for me, that's great. But then you just need to like pay them enough, which then that got tricky. And so then you had to figure out the advertising part. The advertising part, the hardest part is actually convincing advertisers that there's value to be had from, I think the advertiser's biggest fear is, if someone's just getting paid to click my ad for no purpose or for some incentivized reason, then are they really going to engage with my brand? And I think that's the one thing that we really had to figure out along the time. And so an example of that, I'll give you two different examples of where it works and where it doesn't work. Where some companies may do is like, hey, if a game advertiser came to me, is like, what do they want? They want users. But they want more than users. They want people to play their games over time. They want people to have a habit creation. Like when you play Candy Crush, you're not playing it for a day. They want you to play for a week. They want you to play for a month. They want you to eventually buy in-app purchases, or at least see a lot of videos while you're playing the game. And so the way that we solved that was like, instead of rewarding the user for the install, which is a very short-term action, hey, you go download this app and stop right here. We were like, hey, let's reward the user per minute that they play, and then cap out the maximum that they can play per day over a period of 7 or 10 days, enough for it to be a habit forming activity. So that aligns incentives and aligns value. The next one was like maybe like a something like Robinhood, right? So Robinhood wants like institutional trading accounts that all maybe only have $5 in them. So they want retail investors. And so what we asked them is like, what are you willing to pay for that? And they may be willing to pay, say, $100 for someone to deposit $5 and create an account. And so what we'll say to users is say, hey, deposit $5 into this account and we'll give you 50. And essentially we'll just share that revenue back to them. But now you're aligning the incentive, because Robinhood gets the institutional trading. Someone went all the way through that step. So they showed very high intent. And in most circumstances, we actually negotiate an extra perk for the user Um, where it's like maybe you also get an extra $35 in free stock from Robinhood. And so now they get an extra bonus. So really the value to the user in this case is like $85. But that 35 doesn't come out of our pocket. And so that's how we're able to still maintain really high gross margins. So our business traditionally operates on about a 70% gross margin, but we are paying out more to users than just 30% of our revenue if you are redeeming. And the product is just like the way that whether it's breakage or also us being able to negotiate more earnings and savings through the advertiser themselves in that sense. So it took us a while to figure that out on the business model. And it's always something that we have to figure out each time because, someone always asks like, why can't Apple or someone just do this like in a day, like if they wanted to, or they don't say a day, but very quickly. And the problem I think is that like, people have no idea that this is like it's such a complex business to run. Like it's essentially like having 25 micro businesses in one business because you've got to think about everything as like a feature. Like this one feature yields like 3 cents. This feature equals 5 cents. This yields features equals 7 cents. And each one of those features has like its own unit economics that you would then have to like add into that. And it creates like a much more complex system that you need to understand the math behind. And typically these larger companies, especially like companies that could be considered competitive over time, or may decide one day to that it's in their best interest to do this. They have to make the decision of like build versus buy. And so I think that provides us like great exit opportunities, like from strategic partners, because I believe that we're the closest company in the world to make smartphones free, or better, because generally we're providing way more than what the cost of a smartphone is in a month in terms of yield to the consumer. Um, and that allows us to have a bunch of different exit opportunities and larger opportunities. So, um, that's kind of like some of the experience that we had early days and how we've thought about it along the way to keep ourselves competitive. And the fact that this is hard is also it's hard while you're building and it creates ups and downs. But the upside of it being hard is that most people are not going to get into the space because it's just really difficult to make work.
Makes sense. I know you mentioned it's kind of like 25 different businesses in one, thinking about all the different areas that you can reward users. So, for those who might not be familiar with the idea of an earn phone, maybe you can walk us through a little bit of what some of the core avenues are for driving that value for users and how they're able to earn while using their smartphone.
Yeah. So basically everything that you do on a device, like, I mean, there's a monetizing action that's occurring. Like if you think about it, when you read the news and you go to Business Insider or you go to Wall Street Journal or whatever, there are advertisements that pop up. Like they're monetizing you. That attention is being monetized. When you go into YouTube, unless you're paying a subscription, you're also getting monetized. And even if you're paying a subscription, they're still monetizing your data and somehow because the data is getting collected. And then when you search on Google, it's getting contextualized into your either your email or your search history, etc. Um, so anything that you're consuming, content-wise, games, whatever, you're being monetized, and you're the product essentially. So if you think about any of that, I mean, that's pretty much everything. Then if you think about financial services, these banks, like they're providing yield for you, and their job is to get your money into their account so that they can lend that money out to others. Or make transactional revenue when you trade. When you're trading on Robinhood, the trading isn't free. They're making some money on like basically the on the back end of like with their market maker in that situation. And so what we're essentially doing is taking these activities that you're going to do, reading the news, playing games, um, trading stocks, banking, whatever it is. And we're basically matching advertising opportunities with you. And it's all up to you on how much you want to earn and how deep you want to get into it. And basically allowing people to earn money from these various activities. And in many cases, our average user, that's redeeming is earning, 20, $30 a week. And that's enough to pay for the entire family's cell phone bill. And we have people from all walks of life. Some are like the coupon clipper moms. Some people are barely scraping by, like they can't afford gas in their car. And basically we're able to provide that for them, or maybe gifts like during Christmas for their kids. And so it just depends. It's definitely a product that's more focused on the budget conscious, but over time, what we're doing is we're moving more upstream to more that middle class consumer. But fundamentally, looking beyond the U.S. and Canada, where there's there's a much higher like income pillar that we generally have here in life, but there's about 7 billion smartphone users, about 1 billion are iPhone users, 6 billion are Android users, and of those 6 billion, probably about 90% of them are budget conscious in developing countries. And so that is a monster audience. If you're able to unlock billions of consumers and essentially make, the phone and the data plans essentially free, because essentially the connectivity, that is the biggest unlocking opportunity. So, while our businesses has this big opportunity, it's also a very mission driven organization, of what it can unlock for people and their economic freedoms, while they're using these devices.
It's great. I know for Canada, we do pay some of the highest phone rates in the world. And I think it's great to have a tool where you can get some of that value back at the end of the day for users. So it's a really interesting concept. And I know you touched a little bit on kind of the potential countries for geographical expansion and what those use cases are. And I think you talked a little bit earlier about what kind of opportunity exists. But yeah, would love to hear a little bit more about the overall market opportunity. Obviously, traditional smartphones, this isn't something that they're addressing. You guys are very unique in tackling this problem. So what do you
Yep.
foresee as kind of the market opportunity that exists for Mode Mobile?
Yeah. So I think that, as I had Bruce mentioned, like the market opportunity is like, we know that people want the service, especially overseas, because we have 45 million people that have downloaded this product. In many cases, we consider the vast majority of those users like alpha or beta users, because 85% of our revenues derive from the United States. And we have more offering solutions in countries like Canada, UK, a lot of the like English speaking countries. Um, and it's because there's more advertisers in those countries. But 36 million people overseas downloading your product organically is kind of like a testament that, hey, like people want the solution, or they want something similar at least. And so there's a massive opportunity overseas if that's what's happening organically. Um, and the approach that we're taking, is very different than most smartphone makers, because I don't necessarily consider ourselves a smartphone maker. When people see it, they think we're a smartphone maker, that like we're up there trying to compete against Apple or Samsung or whatever. And that is actually like probably the furthest thing that I see us doing. We really created these two phones as an experiment, the two EarnPhones that we have, to see, hey, like what would happen if someone has a choice, and in that like $100 category of device, there's not much differentiation. Like, it's like, it's really hard. It's not like an iPhone that like costs like 1,500 bucks where you can like have all these various unique IP features that is very different, like amongst various devices. And so the phones are pretty much all the same around like, the 80 to $100 range. And so if a consumer has the option to have one phone that pays you and one phone that does not pay you, and then like what would be the difference of how, like what would they pick? Like that was one thing we wanted to see. And then the second thing, was like, how would it be different than someone just having an app that they download that turns their smartphone into an EarnPhone essentially? And that's basically like, we built one of the largest reward apps in the world, by being able to allow people to do that. And what we realize is people with the phones end up like retaining it 3 times higher, earn like, 2.5 times more. So the metrics were way better. And that's really what we wanted to prove to carriers, to partners, to OEMs, because the idea going back to that Roku, and the future vision of the company is not that our EarnPhone will be the only EarnPhone, is that we believe that it's not an if, it's a when this will happen in the market. And so someone's definitely going to do it. And then creating EarnPhone as a category, that's like creating smart television as a category of television. And that's the broader vision for us. And then we just we share the revenue with the partner. And that allows us to then have like EarnPhones in every continent. And we're starting to do that. We have partnerships now in France, in Europe, Africa, with partners that are launching EarnPhones, under their brands, right? Not our own brand. And we're just powering the software, for that. And that allows us to unlock the entire distribution of tons of different countries, users that we would never have access to. And you just do the same in every country. And that's purposely why we also built this model to be scalable. And I think we have consumers that have downloaded our product. We call them earners internally in 170 countries around the world. So, it's pretty cool. Like when you kind of look at it in a globe, I'm like, the countries that have downloaded it might be a little bit higher than 170 now, but there are obviously some countries that we can't get into. because of the rules and regulations that they might abide by. But generally, it's cool to see that almost in every facet, someone has touched the product.
That's amazing. Well, you highlighted some really great traction points there and some statistics that you guys have achieved so far. And I know on your campaign page, you talk about being ranked the number one fastest growing software company by Deloitte Fast 500, and that you've had 32,000% growth. So maybe you can walk us through some of the current traction points that you guys have seen to date, as well as what some of those continued growth plans are for the future.
We were lucky and to be able to be named that. We didn't know that was going to come out the number one. Yeah, there was one company that beat us, not software company. That's why it's the fastest growing software company. They were like a COVID medical company backed by Bill Gates.
Mm.
So we'll give them that because they had like a 200,000% growth rate. But yeah, it was a 32,481% growth rate. And essentially, the company's revenues grew from like 70, at least 70K approximately in operational revenue in 2019. And that's kind of when we just had stumbled on that idea that I had mentioned previously. And that was like our first year revenue. And, within a matter of like, 24 months or so, we had done 25 million in revenue. And so, that growth rate was really, like, it was a crazy time. And, we, part of that is just basically, we stayed really lean, but also kind of always innovating on these new features and learned a lot. And then we wanted to continue that growth as we, you know, continue scaling the business. But on the other end, we also want to maintain, we don't want to grow at all cost, I think is the best way I can describe it.
Mm.
I think the market in 2021, especially 2021 and 2022, early 2022, we're basically rewarding growth at all costs. And it's because like the market was so hot, and then around, Q2, Q3 of 22, like there was a huge slowdown, obviously, in 2023. Then we saw inflation and all these various components. So a big component for us is and why we as a company, I think, have been able to grow really fast in the periods that are right time to grow fast, but also not die along the way. And my co-founder and I, being able to work with each other for 12 years, not kill each other, and also have some exits and wins and never kind of die because that's the biggest issue with the startup. I feel like every year that you don't die as a startup, the higher likelihood is that you're going to succeed, because it's such like the trivial ups and downs of running these businesses. But essentially, a big focus for us going into this year and last year was really to kind of fortify our business under a much more difficult market when it comes to advertisers. So that was creating actions like creating like subscription revenue centric businesses, diversification of revenue. We didn't want to have, one of the worst things that could happen for a business. And, we felt prey to this in some aspects in 2022 because we were actually supposed to do double the revenue in 22. So we were still able to win that award and we still only hit 50% of plan. So that's what was
Wow.
crazy. You know what I mean? Because the slowdown was so deep in the second half. So that kind of gives you an idea of like how crazy our growth rate was at the time that we still hit first, but the slowdown was so detrimental. And what ends up happening for some of these businesses is like, you need diversification of revenue. Because say that you have a client and say my number one client is, as an example, say it's Google, right? As an example, and then Google say they made up 90% of my revenue. They don't, but just as an example.
Mm.
And so, and then one day Google's like, hey, you know what, Dan, we don't like your business anymore, or like, hey, we're going under. And then now 90% of your business is gone.
Yeah.
And so, and then you're in really bad shape because you have, 50 employees, you have 100 employees, you have a burn, you have all this stuff. And so for us, like we try and keep our diversification of revenue where no one partner is going to make up more than 15 to 20% of the business. And so if something goes awry, we can basically substitute something else in there. And so a big focus of that last year was kind of really thinking about the diversification of revenue, creating new subscription revenue streams. So we thought about, okay, how can we actually like this is a budget conscious audience, but it doesn't mean they don't have any money. They just need to be more
Mm.
thoughtful about money. So I'm like, is there a way for us to think about how they can earn faster in our service? So we created a plan that was basically an earn club that allowed them to basically earn faster if they basically gave us a upfront like subscription of some sort, because we basically get a lower margin on them on the advertising side, but on the subscription side, it's more recurring revenue. And so you're aligning incentives. And now that's a 7-figure a year more business. And then we unlocked a ton of different revenue channels. So, and then plus now we're really thinking about these distribution channels that don't necessarily cost us any money because through partnerships with the carriers and that Roku idea. So I think like, what you'll see with our business is like, we're not really focused on growth at all costs anymore because we want to basically grow and grow profitably. And we're on track to hit profitability by the end of the year. And, but we do care about growth clearly as well. So I think those are the things that you'll see kind of like in our updates is that it's really focused around really fast payback periods. So, right now we're hitting like 100% return on investment, like, on average with our user base. So what that means is like when someone downloads our product on day one or uses our product on day one, within 30 days, we basically get all the money back that it costs us to acquire that customer. So everything after 30 days is fully profitable. And, that's a great way to essentially be able to scale a business because essentially you'll never die in that
Yeah.
situation, because cash flow won't be an issue. So a lot of this is just like really the starting to be more mature as an organization as we think about like what our future prospects are, and whether that be a strategic exit or be a public offering. Those are the types of things that we're thinking about.
That's great. Really appreciate kind of you diving in a little bit more to business model there. And, it's so important for so many businesses over the last couple of years to really either pivot or diversify their revenue streams. And it sounds like you guys have done an excellent job kind of staying on top of that and looking at those new avenues to pursue as a company. But to your point, it's not necessarily about growth at all costs. It's about sustainable growth and things like that, which I think comes down to, your leadership and kind of what you've been able to learn throughout your career. So would love to hear a bit more as well, kind of about your philosophy on leadership and how you really kind of inspire and motivate the team around, the mission of what Mode's doing.
Mhm. Yeah, I think for us, I think a lot of our team members, like they are motivated by the fact the company is a mission-driven company. At the end of the day, when you read, obviously we get good and bad feedback. It's hard to deal with like that scale of users, but generally I think we have like 2.95 million reviews with an average 4.4 star rating. I think it's like, if you go look at 5-star reviews alone, maybe it's like 2.4 million 5-star reviews, and when you read some of those feedbacks, I mean, that's very inspirational. I think that, and that motivates the team. I think the thing though that we do internally is really like we have this whole thesis, and I do it myself just more out of habit because it's how the market talks. But referring to your consumer base as users, right? It's almost like a drug term. It's like, oh, I'm a user of this. Like
Mhm.
it's kind of there's a negative annotation to it. And so internally we refer to our base as kind of like earners, because what essentially we do is we turn users, we turn them into earners. And then I think like the next paradigm, especially when we started seeing some of the slowdowns in 2022, and ultimately what got us into crowdfunding, was this concept around we need to maintain our margins. The marketing, the marketing environment is more difficult these days. How can we reward people less without taking money out of the company? Very difficult equation to solve. And so I had this idea. I was like, well, if these people are using our product and they like what we do, could we potentially give shares in our company to them and turn them into owners? And so now the paradigm is like, we take users, we turn them into owners, and now, or sorry, earners, and now we're taking earners and turning them into owners. Because after COVID, especially, everyone became an investor, fractional like stocks and of that nature, and like everyone, became interested in that stuff. And so I think like the team sees that, and in the first year that we started launching our crowdfund centric offerings, we brought in over 25,000 shareholders. And that went through signed contracts, all the agreements, like you're clearly in the space. So it takes a lot of time. It's a lot of questions. And
Yeah.
so, but people can now use their time and attention, not just to earn cash and current rewards, they can own ownership in a share. So if you think about what that means for community, if you think about what that means for ambassadorship, um, that creates a really strong foundation of people that like are fans of your brand. And I believe that, when you can do that, you're basically creating a much deeper community. And when you create that deeper community, you're also able to like, create, better consumers, better customers, like, team members that are more pumped up. And I think it's something unique that we just did. And I think that we have the best chance to basically be the first private company to have over 1 million shareholders. And when you eventually can take a company public under those terms, you can create a totally different like mechanic to your offering because you have this army of individuals that basically stand and believe in what you believe, and you can kind of fight the markets a bit better, you know what I mean, because you have all these advocates that can go out there and are willing to talk about your product, or willing to comment in blog posts, or willing to tell others about it. And that's one of the hardest things to do as a publicly traded company. So I think like you know our team sees that, they sees that like we go through the steps and usually the innovation, because no other companies are doing these types of like unique things that we are
Yeah.
when it comes to how we're treating our offerings. And I think that keeps people motivated, even though it is a lot of work and chaos at the same time. So
That's great. I love that story, really from users to earners to owners. I think that's great. And to your point, it just builds community and an ambassadorship, which is so important for any business. And it certainly makes sense for your model. And I know you mentioned some stats about how incredibly successful your raises have been across the US. So maybe you can chat a little bit about just some of that and what inspired you to come to Canada with this raise as well.
yeah, so basically 2022 is the first time where I was like, oh, okay, yeah, let's go down this path of doing crowdfund, thinking like for sure we'll be ready to launch this in like 3 months, and then did not expect the amount of work that was going to be required to get like the financials, or especially for a company, because we already had complex financials, because we have a complex business model. And so there was a lot of work. So it took us a year to do it. And so it launched like in Q3 of last year. And within like, 3, 4 months, we actually had raised so much money that we had to refund like $1 million because too much money came in. Um, and, uh, and that, yeah, and that's kind of sucks, but it was you have to kind of abide by the laws in the United States around it, where it's like there was a $5 million cap. But we did it in a way of thinking like, hey, if we're going to go down this path, um and we were the first time issuer, and I mean it's pretty rare for a first time issuer to sell out at that level. So I mean, even like I think a lot of our partners were surprised that we brought in that many shareholders and that much money in that little time, because usually have like a year to do it. And but the way I started thinking about it is much more like, hey, this is an investment that we're going to have in the company forever. It's not well, at least until we go public, or something of that nature. Like, but basically, this is like an investment that we're making, and we're going to go down the path already to file for a much larger offering and go into other countries. So as soon as we finish that off, like I think I that's when we contacted you guys, and we were like, hey, like we're going to launch in Canada, and we're launching, and we have a raise right now in UK and all of Europe, and we have one that's running worldwide. And then we're in the process of getting our SEC approval for our Reg A, which is a much larger. So it's like, we did it almost as it's now a part of our product. It's like the best way I can describe it. People kind of think of a fundraise as like, hey, it's something I just do once or once a year or whatever it might be to keep the business alive. I think about it as like it's part of our product offering. Like we have an investors club, like, and we didn't think about it as like, because if you think about what our paradigm is, it's like the average person that's using our product is more budget conscious. And it doesn't mean they don't invest in stocks, but there's a specific thing that they like or not. Not every user we have is interested in owning shares. But then I started thinking, okay, the people that are investing in the company though, those are investors, and maybe they're a little high net worth. Maybe they're likely not a user of our phone, but they understand the thesis that, hey, when I look around eating dinner at a restaurant and 70% of people's eyeballs are glued to their screen, that clearly there's a large market there. And so it sounds like a reasonable business to invest in. But I started thinking, I was like, well, how can we create a deeper relationship with our investor base? And so we created this idea and this concept around like Mode Investors Club. And Mode Investors Club basically uses the same technology that we use on our phones and our apps, but it's focused on investments. And so it's kind of like, hey, we may do a deal with Charles Schwab, or we may do a deal with, as I mentioned, like Robinhood or whatever. And it's like a perk for you because we know you like to invest. Or we may do a deal with like, a financial services outlet that basically has some stock trading tool that costs like $500 a year, and we're going to get it to you for free. And so we basically created like a portal that's about to launch actually, later this quarter, that basically has like, here's these like deals that are just for you. Here's the updates of the company, so you can see like the monthly updates. Here are where your shares are, so your transfer agent, all that stuff. Here's our customer support. And so we think about it as a product. It's part of kind of like what we build on and really kind of create content around. And we made that conscientiously as a decision in the way that we build our product. And the reason that we're in Canada is that we anticipate to continue growing in Canada as well. We have a lot of users in Canada. It's probably one of our top 5 markets, and so naturally made sense. Same language, for at least a good portion of it. And so that was kind of like the general idea, and we intend to scale this around the world.
It's great. Well, we're very excited to have you raising on the platform. Certainly, yeah, a very unique opportunity and lots of great growth and statistics that you guys have had so far. So as we look to wrap things up today, I always like to just ask founders a little bit about their entrepreneurial journey and if there's a quote or piece of advice that's kind of guided you so far.
A quote or a piece of advice. I don't have necessarily a quote. I have more of a mindset, I think,
Okay.
that has guided me along the ways. And I think any founder that is on FrontFundr or any crowdfunding platform or out there listening to this, it's like essentially I think some of the worst times of my entire life are probably like when I look in the future, about a year later, are the times that I'm absolutely like the most grateful for. Like while I'm in it, and I'm like, wow, this is so horrible. Like, why is this happening to me? And you're like a victim almost that mentality. At least I am, for at least for like a day or a week, or depending how deep it is, maybe 1 month. And then I get myself out of that mindset and really focus in. And you rise from that situation, and they're really kind of like creates this fortitude of like shaping who you are, what you're able, what you're capable of. And each time that has happened, which in this company and this journey has happened multiple times, where we almost went under, like especially early days. And you look back, you're like, and you grow from each and every of the situations, and then you're able to handle more. And so I think like, that's there's like you read that thesis in certain books, like, Man's Search for Meaning is one of my favorite books, I guess. And not while that isn't specifically adaptable to entrepreneurship in that book specifically, I think that like general way of thinking is, you know, I'm sure I could find a quote that's related to it, but that's something that's always in my brain and, the thought waves around it.
Entrepreneurship is not easy and mindset and perspective are so important. So I think that's great advice there. Last question for today as we wrap things up. For any investors who might be listening, if you could leave them with 3 things to take away about your company, what would it be?
3 things to take away. Okay. I think the first thing is, I think that this is a unique opportunity. The type of founder that I am, and also the type of the company that this is the type of company that's not going to settle for like an okay outcome. If we wanted to settle for an okay outcome, we could have done that many times and still do today. You know what I mean? And I would have a way more chill life and enjoy and not have to do much. And so I think that like that's something I always say to investors, and I have seed investors that backed this several years ago. And I think that they've always said like, that guy's either going to go broke or he's going to go straight to the moon, and while I can't guarantee either, that is at least like, we're aiming to do something big that impacts like the world. I think that you know, if you're considering making an investment in the company, I think another thing to think about is, the type like there's difference in investing in something that adds value to society and detracts value into society. I think like, if you're a mission driven investor, that's a cool opportunity because of like, this like the millions of people that we power and every year to help them and also do so in a profitable way through this like we have this larger kind of like area that we think about our business really around like almost like the privatization of universal basic income. And while we're not like at like $1,000 a month, I do think that that's possible to get there over the next like decade. And if you could do that, without government assistance, you're really changing game on something. And I think the last thing is that, it's the first time that we're offering this to the Canadian market. It is the same valuation that we offered in our oversubscribed rounds that, if I could open up in the US, I would. But we can't until, the next round comes out. And the next round is at a significantly higher valuation because it's just a lot more capital that we're taking in. So, it's a good opportunity for the Canadian market to take advantage of the same thing that we did. And we were unable to take Canadian dollars because we hadn't gone through the appropriate Canadian process, because you guys also have rules around it. So those would probably be the three things that I would say, in terms of, how we think, what the opportunity is, and, the deal for the time being.
It's great. I really appreciate it. You guys are definitely shooting for the moon. It's such a big concept, amazing growth numbers so far, and really appreciate you giving more of an overview of the business and your own background. So thank you so much for being here today, Dan. And for those who are interested in learning more, you can go to the campaign page at frontfundr.com/mode mobile. So thanks everyone for listening. And Dan, thanks so much for joining us today.
Awesome. Thank you so much for having me.
For anyone new to the podcast, FrontFundr is Canada's leading equity crowdfunding platform, enabling all Canadians to invest in the most exciting startups and growth stage companies, something that was previously only available to the 1%. Subscribe to our weekly newsletter so you can have your questions answered in an upcoming episode. This podcast episode is for informational purposes only and should not constitute financial advice. Investors should conduct their own due diligence on any investment they may be considering on FrontFundr. For details of any offering listed on FrontFundr, refer to the offering document on their campaign page at www.frontfundr.com.